Good morning and welcome everyone to the Money Control live stream. As you can see, there is no Santo with me today and also for the next few days. Well, the news is, guys, that he's just too sad about the fact that India lost to Pakistan yesterday. Okay, I'm kidding. That's not the reason. Of course, he has personal reasons, so relax. But yeah, for the next few days, you will have to contend with the views of a millennial like me. That said, we are going to start the new week clearly in the same way that we ended the previous one, and that is on a lackluster note. If you look at the Nifty futures on the Singapore exchange, they're indicating a very muted start, a very soft start for our benchmark indices this morning. If you look at the cues from Wall Street, clearly benchmark indices there had a very weak Friday. They slumped after a very stronger than expected jobs data for the month of August in that for the US economy. Now, why is this jobs data was important, and we talked about it on Friday as well. Well, this is almost the third consecutive month when the jobs market in the US has displayed a lot of strength, even though US GDP for 2 consecutive quarters has actually contracted. So therefore, while economists argue that there could be a recession, the Fed has argued that with the job market so strong, a recession is very, very unlikely at this point of time. And what this will do to the Fed is that it will give it confidence to continue to go ahead and raise rates the way it has been raising rates so far. Market is now pricing in almost a 75 basis point rate hike, the third consecutive 75 basis point rate hike at the September meeting that is probably going to happen in another week or so. And clearly, you can see this in the market's reaction, the US bond yields, which have risen quite sharply over the past 1.5 to 2 weeks. US dollar index is sitting pretty around the 109 level. Now, this is bad news for us in general. Why? Because this will dry up a lot of the foreign flows that we were getting in the month of August. If you remember, August we saw overall net inflows of about 51,000 crores in the Indian equity market, and we have seen what that can do to our market. So clearly, foreign flows are likely to dry up, and you can see this also in the positioning that foreign investors are currently taking in the futures and options market. Net short positions from FPIs have risen to 84,000 contracts by the end of Friday as compared to around 30,000 contracts around on August 25th, August 26th. So clearly, there's been a sharp jump in the bearishness among foreign investors, and that is probably going to reflect in the lackluster trade that we are seeing currently. The flip side to it, to this is that some of the retail investors are coming back because the market is giving opportunity to buy the dip. Some of the retail investors who are net sellers, remember, in the month of August, while FPIs were buying, DIs and retail investors were selling, they are clearly coming back into the market. If you look at the Friday's capital flow data, both FIIs and DIs were actually net sellers. So clearly, retail investors are something that might provide support. So that is something, as far as the trade setup is concerned, something that traders will be very keenly watching out for. But now let's quickly dive into some of the stocks that could be buzzing, and I have 6 stocks for you, which I believe could be, quite buzzing in trade this morning. Starting off with from the hotel industry, Chalet Hotels. If you look at the stock, well, the news flow is, of course, that the company has entered a pact with the Delhi International Airport or the Indira Gandhi International Airport, wherein it's going to open up a hotel within the Terminal 3 campus. So that clearly is going to be a big boost for the company. Going ahead, you could expect very strong sales from this new venture in the coming years, and that is on the news flow side. But on a technical level, if you look at it, the stock, while it has been a very good performer this year in 2022, recently it has been displaying a little bit of feebleness. If you look at the momentum indicators, at this point of time, Chalet Hotels is clearly in a very neutral zone. So any sort of upside today could possibly be capped by people who are looking to continue to book profit on this counter. Let's not forget that from a longer term perspective, Santo has been very bullish on the hotel space. He believes that people are not, interested in doing anything else but vacationing this year, apart from, of course, going to their work. But clearly, this is one industry that has a lot of optimism around it for the next 2 and 3 years. But at this point of time, from a short-term perspective, it seems market feels that the stocks have run up enough, and there is need for some profit booking. We will have to wait and see how the stock reacts, but most likely it is going to be a very positive reaction. The second stock on my radar today will be ONGC. from the oil and gas space. Yes, I know, beaten and battered. The stock has been beaten and battered, and of course, with the news coming in, last week of the government increasing additional excise duty on crude oil production once again, clearly the regulatory news around it has not been very, very favorable for investors. But there is a very crucial meeting of the OPEC later today, which is going to possibly decide whether to freeze oil output at current levels or continue to cut it even further. Now, why this is important is because oil prices, if you remember, over the past 2.5, 3 months have come off very sharply. They are now sitting around their year's low of about $91 to $93 per barrel as far as the Brent futures is concerned, and that is worrying a lot of oil producing nations. So at this point of time, there is a lot of very strong murmur that Saudi Arabia led OPEC could look at a possible freeze on output at current levels and hope that demand revives, or even look at a cut. If they do cut output, that could boost oil prices beyond $100 very easily, and that would be a very, very good sentiment boost as far as ONGC is concerned. So something to watch out for on the news flow front. Technically, of course, the stock is at this point of time exhibiting a lot of weak momentum. I would not be surprised if any sort of rally in the stock is utilized by a lot of traders and short-term investors to book their profits or sell on rise. So clearly that it is a very catch-22 sort of a situation as far as ONGC is concerned. The next stock on my radar is not really concerned with the news flow, but this is a brokerage pick because a very interesting report came out earlier today from the house of Morgan Stanley, and they have made RIL, Reliance Industries, their top pick as far as the oil and gas sector is concerned. Now, why they have done it is because we all know that at the AGM recently, RIL announced another capex plan going ahead. They're going to invest 2 lakh crores almost in the 5G technology that they're rolling out from Diwali. Investments in retail with the entry in FMCG, and of course the new energy projects that they are already getting into. Now, Morgan Stanley believes that RIL is entering its 4th capex cycle in the 21st century. The first one, of course, was the oil and gas cycle that started around 2007-8. Then, of course, we had geo, we had retail, and now new green energy. So clearly, they believe that this new investment could almost double the company's net profit by 2027. That is the belief that they have at this point of time. Overall, if you look at the price target that the brokerage has, they have, of course, a buy call, but they have a price target of about 3,085 rupees, which currently implies about a 22% upside on the stock. Now, technically, RIL has been weak. Of course, the imposition of the additional excise duty on refined product exports has been a bit of a sentiment dampener as far as the stock has been concerned, and last week that was also raised. So that is something that has been continuing to weigh on the performance of the stock. But overall, also the 2800 mark is where the stock has continuously faltered to break past that level, and it will be very interesting to see if we do see a revival of interest in RIL, whether the stock can break past that level, because let's not forget the consensus price target for RIL is somewhere around the 3200 mark. So clearly that is one stock to really watch out for. The next stock on my radar today is Forbes and Company. Well, this is a bit of an unfortunate news. The stock is likely to be under pressure today after the unfortunate demise of the leader of his promoter group, Shapoorji Pallonji. Cyrus Mistry, unfortunately, yesterday passed away in a car accident near Palghar. So that is probably going to have a sentiment dampener on the stock. If you look at the stock, besides this news, it has clearly been one of the rank outperformers as far as 2022 is concerned. The stock has risen almost 100% in the past 3 months alone on the back of what has been a very strong revival as far as earnings is concerned. Now, the company is involved in a lot of spaces. It's involved in engineering goods, it's involved in consumer durables, especially water purifiers and other sort of household appliances. So clearly there was this optimism for the stock. Recently it has given up some of its gain, largely because they were, of course, after a 100% rally you do expect some bit of short-term profit booking to take place, but this news flow coming in could be a bit of a sentiment dampener on the stock for the short term. If you look at technically also, the stock seems to have lost a lot of the momentum it was displaying almost 2 months ago. At this point of time, most of the momentum indicators are clearly quite weak, and I will not be surprised if this stock sort of flows out of range of investors range or traders range for the time being. The next stock on my radar is Bharat Forge. Now, a lot of news flow around Bharat Forge these days is concerned around the company's defense venture and what they're doing there. Clearly, a lot of defense stocks have been in focus, but the traditional business, of course, of auto components, that is something that might be in focus today, because if you look at the Class 8 truck orders in the US for the month of August, they were very, very robust. Yes, on a year-on-year basis, they're still down almost in double digit, but if you look at it from a sequential point of view, from a month-on-month point of view, almost 109% month-on-month jump in Class 8 truck orders. It's clearly, this is a trend that has been, being displayed by Class 8 truck orders in North America for the past 3-4 months now. And that is something that is likely to really boost the sentiment of the company as well as investors in the company, because this is, of course, their bread and butter business. Apart from that, this, of course, the recent rally that we are seeing in Bharat Forge has been on the back of a decent Q1 earnings. Yes, there was a lot of pressure as far as margins are concerned, but a lot of analysts believe that a lot of that peak margin pressure may be off after the September quarter, and also the defense businesses where a lot of the focus is at this point of time for Bharat Forge. We know what stocks like Bharat Electronics, Hindustan Aeronautics are doing with the government's focus on indigenizing a lot of defense production. Clearly, Bharat Forge is one stock to watch out for in that segment. My last stock, and of course, it's the stock that we talked about in my preview to the show on Instagram, PVR. Now, why PVR will be in focus is because if you look at the movie pipeline going ahead, Bollywood has been struggling very, very badly. If you look at since the full reopening that we have had since March, April, a lot of the Hindi industry, film industry movies have been tanking on the box office, and that has clearly affected sentiment as far as PVR is concerned. Now, that is something that could turn around. That is the belief, because if you look at the advance booking for the the movie that is now in the pipeline, Brahmastra, which is an Alia Bhatt and Ranbir Kapoor-starrer, which is going to be released this Friday. 27,000 advance bookings as far as PVR is concerned so far, according to brokerage from Edelweiss Security. Edelweiss believes that if Brahmastra comes out to be a good movie, it could make audiences come back again for the upcoming Bollywood releases. Let's not forget that the festive period releases are generally tend to be the big bang money maker as far as the Hindi film industry is concerned. And Edelweiss is hoping that if this movie turns out to be good, then of course a lot of audiences might come back, a lot of footfalls might come back, and that could be another trigger for a revival in the stock. There has been a lot of buzz around Brahmastra, of course, for reasons that I don't really need to get into, because I'm pretty sure that you are very aware of it. But clearly, it seems like the audience is a bit hyped about this movie, and PVR, and of course, is soon to be merged entity Inox Leisure would hope that this turns out to be quite good for them. If you look at on the technical charts, clearly PVR has seen a lot of correction in the past 3 months. It had a spectacular rally from about October onwards till about March and April end. But since then, the stock has given off almost 18 to 19% in the past 2.5-3 months, clearly on the back of what seems to be a very weak, box office collection as far as Hindi film industry is concerned. But at this point of time, a lot of analysts feel that the risk reward on the stock has become quite reasonable. You have, of course, the major trigger of the merger with Inox Leisure being completed. That will soon be completed. So that is going to be one trigger for the company. And apart from that, as I mentioned, if the Bollywood, film industry revives, then clearly that is going to be something that investors will really cheer, and that could reflect on the earnings of the company. Let's now quickly take a look at how the market has opened, and clearly it has been a very, very lackluster opening. Clearly, the way it was on Friday, I mean, it was such a boring session on Friday. It seems like market has started off on the green foot, on the front foot, but the gains are very, very marginal at this point of time. As we have seen the past week, the mid-cap space continue to outperform, the small and mid-cap space continue to outperform. We look at the Nifty Small Cap 100, higher by about 0.4%, the Nifty Mid-Cap almost similar range. If you look at the top gainers on Nifty, NTPC, Coal India, again, the cyclical names, infrastructure names doing quite well. Hindalco higher by about 1%, and Tata Steel. So the metal names have also made a decent comeback. Of course, there's a lot of buzz around what might happen in China with the the Communist Party meet coming up next month. a lot of buzz is that there could be more stimulus package being announced as the government looks to probably resuscitate its economy, which has been battered by the COVID. So it's not surprising to see a lot of the steel names being in focus. L&T, another infra name, doing quite well, higher by about 0.6%. But it's the IT names that are suffering. Wipro down, TCS down at this point of time. So a decent start. Let's hope that the market can build on it, but let's not count too much, or let's not put too much of our eggs on that basket. With that, it's a wrap. I hope that you enjoyed me doing this show solo without Santo's intelligence and his wise words. But if you have any feedback, please post it on the comment section below. And of course, keep following us on the social media links that you can see at the bottom of your screen. And guys, for the rest of your financial news, stay tuned to moneycontrol.com and download that Money Control app. We'll catch you again live at 3 p.m. Actually, I'll catch you again live at 3 p.m. Till then, have a great day.